feeling the squeeze in today's real estate jungle. I mean, whether you're a renter watching prices just keep climbing, or maybe you're a landlord navigating these tighter margins.
Or even someone just dreaming of buying, wondering when on earth your chance will come.
Exactly. We get it. This isn't just about, bricks and mortar. It's really about your financial future.
Mm-hmm.
Welcome to the deep dive. We've really crunched the numbers here. We've sifted through the data to bring you the insights you actually need right now.
Yeah, to understand this, well, let's call it volatile market. It's shaped by so much inflation, rising interest rates, global shifts.
Right. And our mission today is pretty simple. Cut through the noise, extract the crucial information, and maybe equip you with some potential strategies.
So you feel informed, not, completely overwhelmed by it all.
Precisely. We'll be digging into inflation, those relentless interest rate hikes, and even the ripple effects from international trade tensions. Okay, let's get into it.
Absolutely. Yeah. And what's really key here, I think, is how these things aren't separate issues. They're all tangled up, creating this perfect storm in real estate.
Yeah, it's not just one thing.
Not at all. Take inflation plain and simple. It's pushing up the cost of, well, everything.
Groceries, gas.
Exactly.
Mm-hmm.
And the materials you need to build or fix up a house. Then you've got the central bank stepping in.
Trying to cool things down.
Right. They raise interest rates to fight that inflation. But that has a really direct knock-on effect on borrowing money.
Yeah.
Huge effect.
And borrowing costs are just fundamental to real estate, aren't they? I mean, for someone trying to buy a home,
Immediately.
higher mortgage rates just shrink their budget instantly. We looked at some data, and it's pretty stark.
What did you find?
Well, basically, in most U.S. states now, you need a six-figure salary to comfortably afford even a median-priced home. Think about that.
Wow. Yeah, that really puts it in perspective. A six-figure salary.
It locks a lot of people out. But it's not just the home buyers feeling this, is it? Landlords are right in the thick of it, too.
Absolutely. Landlords are dealing with higher rates on their own loans. Could be for buying a new property, doing renovations, maybe just refinancing an existing loan.
So their costs go up.
Their costs go up.
Mm-hmm.
And that eats directly into their margins, their profit. And, the risk ultimately is that some of that gets passed on.
To tenants.
Right.
In higher rents.
Which just adds to the financial pressure many renters are already under.
Yeah.
And speaking of costs going up, we can't ignore those trade tensions and the new tariffs.
Right. The ones between the U.S. and, various global partners. How does that specifically play into housing?
Well, think about building materials. Lumber, steel, appliances. A lot of that stuff gets imported. Tariffs make those imports more expensive.
So the basic cost to build a new house goes up.
Significantly. And the consequence of that is pretty straightforward.
Fewer new homes get built.
Exactly. Construction slows down. And with housing supply already tight in so many places.
It just makes the shortage worse and keeps prices high. Or pushes them higher.
Precisely. And it's not just us saying this, feeling this out. We're seeing nervousness in the industry itself.
Ah, you mean that Commercial Real Estate Finance Council report?
Yes, exactly. It's a really good temperature check on what lenders and investors are thinking.
And what are they thinking? Not great things, I gather.
Well, they reported a pretty significant drop in sentiment recently. Confidence levels are down to where they were back in the early days of the pandemic.
Wow, that low. That says a lot.
It does. That kind of worry in the financial side of real estate usually means, banks get more cautious.
Tighter lending, slower deals.
Yeah, potentially tougher to get credit down the line. It signals a slowdown.
Okay, so if you're a landlord looking at this more difficult environment, what do you do? The old strategies might not work anymore.
No, probably not. I think the name of the game right now is flexibility and protecting your cash flow.
Flexibility, how?
Well, look, rental demand is still pretty strong in a lot of areas, right? Because buying is so tough.
Right, people have to rent.
But, and this is the key, tenants are also stretched thin financially. So pushing for really big rent increases might backfire.
You risk losing a good tenant.
Exactly.
Yeah.
You might end up with a vacancy, which costs money and time. So maybe it's smarter to compromise a bit, a smaller increase, maybe negotiate, just to keep a reliable tenant in place.
That makes sense. A bird in the hand, sort of. What about the financing piece you mentioned? Loans coming up for renewal.
Yeah, that's a critical point for landlords to watch. Banks are definitely getting more cautious, more risk-averse.
And if you have a floating rate loan.
Oh, those rates are all over the place, very volatile. So if your loan is maturing soon, you need to be proactive, like really proactive.
Meaning
Meaning get ahead of it, Talk to your lender early, explore all your options, be prepared for potentially stricter terms, maybe a higher rate. Don't wait until the last minute.
Okay, good advice. Is there any silver lining for landlords in all this?
Well, there's an interesting trend emerging, particularly in Europe, around energy efficiency.
Ah, okay. Green buildings.
Sort of. Basically, properties that are more energy efficient are starting to be seen as, well, better investments. They might get slightly better valuations, maybe even more favorable financing terms.
So upgrading your property insulation, better windows, that kind of thing isn't just good for the planet. It could actually be a smart financial move.
It could be, yeah. It potentially boosts the asset's value and makes it more attractive to lenders and maybe even tenants who care about utility bills. Something to consider.
Interesting. Okay, let's shift gears. What about tenants? Millions of renters feeling that squeeze. What can they practically do? Do they have any power here?
You know, they might have more power than they think. It goes back to what we said about vacancies.
Landlords don't want them.
Exactly.
Right.
Replacing a good tenant costs time, money for cleaning or repairs, maybe lost rent. So retaining a reliable tenant is often the preferred option for a landlord.
So how does a tenant use that?
Knowledge is power, really. Before your lease is up for renewal, do your homework. Seriously, research your local market.
What should they look for?
Are rents still climbing steeply in your specific neighborhood? Or are things starting to cool off? Are there more for rent signs popping up than before?
Okay.
If the market is softening even slightly, you can use that information. Negotiate. Ask for a smaller rent increase than proposed.
Or maybe ask for something else, like an upgrade.
Yeah, absolutely. Maybe they won't budge much on rent, but perhaps they'd agree to paint the apartment or install a new appliance to keep you happy. Or maybe negotiate more flexible lease terms. It's worth asking.
So don't just accept the first offer. Got it. Any other strategies for renters trying to save costs?
Well, the obvious ones are still relevant. Getting roommates can significantly cut down your share of the rent and utilities.
True.
Also, think about location. Maybe look at neighborhoods that are, a bit further out or still developing. They often have more affordable options than the really established, popular areas.
Exploring emerging neighborhoods.
Right. And one other thing to consider, maybe less common, is a longer-term lease.
Like a 2-year lease instead of 1? Why would that help?
Well, some analysts are predicting interest rates might start to come down, maybe late 2025, perhaps early 2026. If that happens, rents could potentially stabilize or even rise more slowly later.
So locking in a rate now for 2 years could protect you from future increases if rates do drop and the market heats up again later.
It's a possibility, yes. It gives you some stability and predictability in an uncertain market. Worth asking if your landlord offers longer terms.
Okay, that's helpful for tenants. Now, what about the average Joe or Jane, the aspiring home buyer? A lot of people are just waiting, right? Sitting on the sidelines.
Yeah, a huge number in a holding pattern. It's understandable given the costs and the rates.
Are there any signs of hope? Any light at the end of the tunnel?
Well, we're seeing some very, very early tentative signs of cooling in certain, usually very expensive urban markets.
Oh, where?
The example often cited is Boston, where some commercial office towers have sold at significant discounts. Now, commercial isn't residential, but
maybe it reflects a broader showing confidence, a little bit.
possibly. It's a faint signal, but it's there. However, and this is a big however,
Yeah.
people shouldn't expect dramatic, across-the-board price crashes.
Why not?
Two main reasons. The housing supply is still incredibly tight overall, just not enough homes. And second, affordability programs and initiatives tend to roll out quite slowly. So those factors prop up prices.
Okay, so no massive fire sale is likely. But what should hopeful buyers be watching for? What are the concrete signs that things might be getting better for them?
Good question. There are specific indicators. First, obviously, mortgage rates. Are they starting a sustained downward trend? Not just a blip, but a real move lower.
Okay, mortgage rates. What else?
Building permits. An increase in permits means more new construction is planned, which eventually helps with supply.
Eventually, right. Takes time.
Takes time, yes. Then inventory. Are more homes actually being listed for sale? More choice for buyers usually means less upward pressure on prices.
Makes sense. More listings, less frenzy.
Exactly. And related to that, watch the bidding wars. Are they becoming less intense? Are homes selling closer to the asking price? Or are you even starting to see some price reductions?
Okay, so lower rates, more permits, more listings, fewer bidding wars or discounts appearing. Those are the signs.
Those are the key signals, yeah. If we start seeing a combination of those things, Well, based on current forecasts, maybe the second half of 2025 might offer a slightly better window for buyers who are financially ready. Might.
A potential window in late 2025. Okay, something to keep an eye on. Now, you mentioned something earlier that often gets overlooked, eco-risk, climate risk in real estate. Tell us more about that.
Yeah, this is, I think, increasingly important, maybe not discussed enough.
Yeah.
There was a report from the European Banking Authority.
Okay, what did it say?
Well, it looked at banks' real estate loan portfolios. They found that while, yes, some loans are for energy-efficient buildings, banks still have significant exposure, meaning they've lent a lot of money to industries that are vulnerable to what they call climate transition risks.
Okay, translate that for us. What does vulnerable to climate transition risks mean for a homeowner or a landlord?
It means things like properties in areas prone to flooding, or wildfires,
Hmm.
or maybe even extreme heat or drought conditions.
Right. Areas facing physical climate change impacts.
Exactly. And the risk there is multifaceted. Insurance costs in those areas could skyrocket, or insurance might become harder to get altogether.
Which makes owning or financing a property there much harder or more expensive.
Precisely. Lenders might become more hesitant to finance properties in high-risk zones, or charge higher rates if they do. It affects the fundamental value and viability of the property long-term.
So it's another layer of due diligence for buyers and investors now, thinking about flood maps, fire zones.
Smart buyers and I think forward-thinking landlords are definitely starting to factor this in. It's not just about the neighborhood amenities anymore. It's about climate resilience, too. It's likely to become a much bigger factor in valuation in the coming years.
Wow. Okay, another thing to add to the checklist. So as we wrap this up then, it really sounds like the message is caution, flexibility.
I think caution, flexibility, and being informed. Those are key. For everyone, renters, owners, potential buyers, investors, the market demand a really thoughtful approach right now.
Yeah, it's not a time for impulsive moves, definitely, but also not a time to just completely tune out, right?
Absolutely not. Well, there are challenges, big challenges.
Mhm.
Understanding these forces, inflation, rates, supply, even eco-risk, helps you spot potential shifts or opportunities. Staying engaged is crucial.
Don't rush, but don't stagnate either. Keep learning, keep watching those indicators we talked about.
Exactly. Stay prepared, stay informed. Opportunities might arise, especially for those who understand the trends.
Okay, so to leave our listeners with something to think about, as you navigate your own housing situation, whatever it is, what overlooked factor, maybe something we touched on, maybe something else entirely, do you think might hold the biggest key to your future success in this, well, this constantly evolving real estate landscape?